Alrighty, let's continue with regulation. Looking here at cash basis. When we talk about cash basis, that is what an individual taxpayer is. What does cash basis mean? It says most individuals use cash basis of accounting. However, accrual is required for purchase and sale of inventory. What does that mean? That means if in December I go out and I buy all of my books for the whole year, even though I paid for them in December, I'm going to have to use accrual accounting, which means I expense them as cost of goods sold as I sell them. So again, with inventory, that's the one exception. You have to use accrual. Everything else is going to be pretty much cash basis, whatever that means as we define. Some entities are prohibited from using cash. C Corps with gross receipts of over $5 million. Partnerships that have C Corps as a partner. Tax shelter, certain trusts, they have to use accrual basis. That means when I teach you individual, it's cash. When I teach you corporate, what's it going to be? It's going to be accrual basis. But we're going to kind of modify it. Whose favor will we benefit? The corporations or the IRS? The IRS, very good, right? So we'll learn that in corporate tax in Reg 3. Cash basis, it says recognize income as cash or property is received. So as the cash or property is received at the fair market value received. Not necessarily at what I charged, but if you gave me less than I charged you $1,000, but you only gave me $700 of $600 of cash and a $100 asset, fair value of asset, what did I receive? $700. That's what I'm going to get taxed at. And it's actually or constructively received. What does that mean? Actual or constructive receipt means the unrestricted right to the money. For example, I had a really good year this year. You write me a check on December 28th for $100,000. I have that check in my hand. What, do I have the unrestricted right to go to the bank and deposit it today? Yes, I do. But I choose to deposit it January 2nd. So even though it hit the bank January 2nd, 3rd, 4th, legally, when is it considered revenue? X1 or X2? X1, because I had the unrestricted right to the money, which means that I had that money as of December 31st, therefore it's income in that year. Now, in the real world, we're all very honest. Right? On the exam, you're very honest, right? So on the exam, when is it income? You just need to remember that rule. What about deductions? Cash or check is dispersed. So when you write that check, you stick it in the mail, lick it shut, put it in the mailbox, that is considered dispersed, even though it hasn't been received, cleared, cashed, and so on. Also, if you expense it on your credit card, same kind of thing. When I charge it on there, that is considered an expense for the year as well. Now, put a little asterisk next to recognize income, report deductions. That was a written communication. So remembering the written communication, all they're asking is, your client is confused as to what the cash basis means. Please write a little memo to them. This can be worth 10%. Dear client, thank you very much for your question regarding the fact that you are confused regarding what is considered cash. You're just repeating the question. Then you give them the meat. You tell them what you're going to tell them. Tell it to them. Tell them what you've told them. That's a beginning, a middle, and an end. That's all they're looking for. So there's not a lot of meat there, but it's enough to get you the 10 points that you need.